Thank you, Melanie. Getting the warning that I'm being recorded, so I'll be on my best behavior. Thank you for inviting me. We have a small group, so I am very happy for this to be pretty informal. Feel free to put questions in the chat, but if you also just want to jump in at any point, more than happy to make this a discussion. I want to give whatever I can that's going to be most useful for you. So as Melanie mentioned, I am a partner in the ESG and Impact practice at Kirkland Ellis, which is a big global law firm. However, my home is and has for the last 10 years been here in Alaska. So I often tell people that I started the remote work trend before the rest of the world jumped on that bandwagon in 2020. My role within the ESG and Impact practice at Kirkland is kind of overseeing our daily operations and also our kind of strategic thinking. So thinking about how we, sort of respond to market trends and guide our clients, which are a mix of investors and companies, to, kind of be positioned to ride the wave of what's really been kind of a huge trend that's taken markets by storm over the last couple of years. So I'm here today to talk about impact investing, which is really become pretty mainstream in the last, call it 3 years or so, 3-4 years. It used to be quite niche, but now, many of the largest alternative asset managers out there, like big private equity firms, they're all launching or have launched impact funds. And so there's just, this has been, what was formerly this pretty, niche area, fewer dollars, smaller deals, now has just sort of exploded. And so it's driving, the market sort of all across the spectrum. I have a deck with a bunch of materials. I am not going to read it to you, but I am going to pull it up on the screen here, and I'm happy to provide a copy post-presentation to anybody if that's helpful. So I will. Oh, Melanie, can you enable screen sharing for me?
Is it not? It should be enabled.
It says host has disabled participant screen sharing.
Oh, well, how annoying. I'm sorry. One moment. You would think that after COVID, we would have all gotten the hang of this. All right. How about now?
Yep. All right. So let me start at the beginning. All right, so the topics that I have in this deck are a little bit of sort of ESG and impact market insights. Then I'll touch a bit on impact measurement and management, mention alternative corporate forms, because that might be relevant to some of the companies that we have represented here. And then, because I'm a good lawyer, I'm going to end with a note on greenwashing and some of the legal or if not legal reputational risks that we're seeing arise from sort of the market frenzy around ESG and impact. So ESG and impact market insights. I hope that some of you are thinking to yourself, I came here to learn about impact and now she's mentioned ESG and clearly she has no idea what she's talking about. ESG and impact are two distinct concepts. And I think the rise of ESG as an operational and investment imperative over the last 3 years or so. I mean, it's regularly in the headlines in the Wall Street Journal, the New York Times, has really created some confusion about what is impact in recent years. So I do want to talk about both concepts, mostly because I think it's important to distinguish them. So when we talk about ESG, that refers to taking into account environmental, social, and governance issues, and that's a really big umbrella in investment decision-making or if you're a company in operational decision-making. in the US, it tends to imply a focus on issues that could create material risk or opportunity, but may not be reflected in traditional accounting statements. So think about, a manufacturing business that relies, or maybe it's a company that has third-party manufacturers in a location where the manufacturing process is very water intensive. And over the next, 10 years, we expect it to be increasingly dry. So there's a risk that, they don't have enough water for their operations. That would be kind of a classic example of ESG. Ultimately may be very relevant, but it probably doesn't show up, in the current balance statement. The folks over in the EU have a sort of different view. They think of ESG really as encompassing impact in many cases. So they think about, when we talk about ESG as a concept for how you invest or how you operate, they think of that as you're not just thinking about things that could, be bad for business, but you're also thinking about externalities, right? About your impact on the environment or on society. And so I have a little graph up at the top right here that sort of illustrates the overlap between ESG and impact, and but shows that it's not complete. So when we talk about impact investing, we're talking about a type of investing where you're seeking to achieve positive, specific, and measurable environmental social outcomes alongside financial returns. So there's essentially two metrics of success, or maybe multiple metrics, but there's the environmental or social metric, or metrics if there's more than one, and then there's the financial metric. And additionality is a really key concept here. So when we talk about impact investing, we're talking about, creating those environmental or social outcomes as a result of the investment dollars. So my personal view is that if you are investing in public market equities, that is not impact, right? When you have stocks trading on a secondary market, your dollars aren't really changing the amount of money that flows to the company, no matter how how much good it may be doing for society. By contrast, many angel investors, probably think of themselves in an impact, with an impact lens, even if they don't sort of use the formal title, right? Because you're providing that first line of funding for a business and enabling it to do things that, in many cases, if not all cases, right, it wouldn't be able to do without those dollars. So in some sense, angel investing almost is by, definition impact if you're investing in good companies. And then really important to note that impact investments can be concessionary, but they don't have to be. So when these big private equity firms are raising impact funds, they are promising above market rate of return. And I think this graphic, which I stole from Bridge Ventures, does a nice job of sort of showing where these different concepts sit on the investment continuum. So, impact investing is not ESG. It's also not philanthropy. There is an expectation of financial returns, in some cases market, whereas in other cases, maybe, the expectation is that you're creating benefits that warrant some level of lesser return. So the point of this is just to say that, like, the largest investors out there, the big limited partners, the pension funds, the insurers, the foundations, are all looking at impact as an area of opportunity. Maybe not all, but many of them. And so that's generating, more interest among asset managers. And then, of course, that trickles down to the companies. So increasingly, we're seeing, ESG and impact being looked at by companies as a real tool for capital raising, right? This can be part of how you tell a really compelling story about your business. And I like this graph because I think it just shows that, there's a really broad range of industries that are involved in transactions with impact buyers. So like impact funds that are out there. And so I think it just highlights that, this isn't sector specific, right? There's all sorts of companies can have a compelling ESG story or position themselves to be attractive to impact investors. This is what I do. So fund and legal terms is where I live. I think, this is from a survey that was done a couple of years ago. Actually, one of the associates in my practice group was very involved in this at her former law firm. And, I think top level, this survey is, was of, relatively large investment firms. So, I think if we're talking about impact investing at a smaller scale, we wouldn't anticipate seeing, these kinds of like formal contracts and formal contract terms. But I think it is worth just knowing at a high level that impact is something that is getting baked into contracts generally, both from like asset managers to their investors, to the LPs, and from the asset managers down to the companies. And I think, the most important thing is to note that the impact orientation is typically kind of built into that, right? So if you had a fund, like your fund limited partner agreement, which is sort of the main contract that establishes a private fund, it would actually say, and the purpose of this, we want to make money and we want to achieve these, specified impacts. And this is just some other data from that same survey, which I'll let you, read in your spare time if you're really nerdy like me. I guess the one thing that I might note is that increasingly, we're seeing incentives getting sort of baked into contracts. So in the private equity context, we talk a lot about something called carried interest, but I think it can be more basic, sort of like, are there ways to incentivize achievement of impact by, for example, having an extra pot of cash that comes upon achievement of those impacts, or, a lower interest rate, or, kind of whatever it may be. But that is something that we're seeing, increasing kind of experimentation with in the market. And then this is an example of one of the biggest private equity impact funds out there, TPG's Rise Funds, which is one of Kirkland's clients. They invented something called the impact multiple of money, which is basically a way of quantifying their impact in dollars. So like converting, the metric tons of CO2 avoided or the students educated into the impact value. So in addition to being able to tell their investors that we're getting a 25% net internal rate of return, which is, last I looked, what the Rise funds were bringing, they're also able to say, our companies have, as a result of our investment, contributed these positive benefits to society. So how do we measure impact? TPG obviously came up with their own way of doing this, and that's because it's really hard, and there's not a industry standard. The United Nations Sustainable Development Goals have gained pretty widespread adoption as at least a sort of framework for identifying areas of impact opportunity. I'm just looking at your comment, Melanie. And the SDG does have a tool out there that provides some indicators that can be used to measure contribution to the SDGs. There's some other tools out there. The most notable, probably other one that I would mention is the GIIN, GIIN, the Global Impact Investing Network's IRIS Plus metrics. They have a set of impact metrics that are out there, but basically, managing impact, including sort of measuring these outcomes, is important to be able to sort of chart progress, but it's really hard. And this survey at the bottom just shows what some of the challenges are with impact measurement and management, which again, I'll let you read in your free time. If we take a step back from sort of the granular metrics, I think there are some frameworks out there that can be helpful just in terms of thinking about process. So the operating principles for impact management, which were launched in April 2019, are pretty widely used among like big impact investors. And I think it provides like it's this 9 steps of sort of having an impact process. And I think that those can be applied to investors that are operating on a much smaller scale, to just think about okay, what are we defining as our objective? How are we going to manage that? How are we going to evaluate sort of our investments against that? And somewhat similarly, there's something called the impact management platform, which has this big ambitious goal to ultimately sort of consolidate, streamline impact management and data disclosure, and develop kind of a global standard. For those of you at all familiar with ESG, the International Sustainability Standards Board has a similarly big ambition in the ESG space. I think time will tell how successful they will be at galvanizing consensus. But I do think that these 5 questions here, which they refer to as like the 5 dimensions of impact, are really helpful. I think they're helpful both for companies and for investors if you're thinking about impact, just saying like, okay, what is the outcome that we want to contribute to? Who is it that's benefiting? How much are they benefiting? How are we being additional? That's what number 4 is getting to. Are we contributing to an outcome, that's better than what would have occurred otherwise without this investment? And then, how big, what's the risk? And I think those are very helpful questions, sort of regardless of the scale that you're operating on. So I wanted to mention briefly alternative corporate forms. I think this is one way that businesses are, seeking to demonstrate to investors that, that they have sort of an impact or ESG, depending sort of on where you are, thesis to their business, and kind of to bake that a little bit into the DNA of the company. I should add that I'm not an expert on this topic, so if you ask questions that aren't answered on the slide, I probably can't answer them. But I do know the very basics. So benefit corporations. Benefit corporations is a type of corporate form that is available in about 35 states. Alaska is not one of them. So unfortunately, if this was something as an Alaska business that you wanted to take advantage of, you would need to incorporate in another state. That state, perhaps unsurprisingly, is most commonly Delaware. Delaware has public benefit corporations and public benefit LLCs. And it's the Delaware PBCs and LLCs are widely seen as conferring some advantages that benefit corporations in other states don't necessarily. So it's pretty popular, for companies like, the ones that are listed here, when they, are sort of, when they've gotten bigger and they're maybe like look at the IPO stage or, at the stage of getting, equity investment from big investors. And I've outlined in the deck, which like I said, I'm happy to give you some of the key benefits and considerations. Other alternative corporate forms, I mentioned that there's other states with benefit corporations. There's a few states with something called social purpose corporations. And then there's something called B Corporation certification. So you guys have probably heard this, or you probably have products in your house, the, B and the little circle around it on the back. I can think of several things that I have that have the B Corp stamp on them. So benefit corporations are not a legal entity. It is a certification that is issued by a third party, the nonprofit B Lab, as a way for companies to kind of show off their ESG and impact credentials. It's a bit expensive, so it's often not something that companies pursue until they're a little bit bigger or more mature. But we do have a couple of Alaskan B Corps, which I have shown on this slide as well. And then there's a lot of big names out there as well. To become a certified B Corp, among other things, you have to amend the corporate governing documents to actually bake in that balance of profit and purpose. You can also convert to a corporate form that explicitly requires that, like Delaware PBC. But if that's not readily available, amending the governing documents works as well. And then there are also certifications out there for women and minority-owned businesses, and these can be incredibly advantageous for contracting with third parties in addition to sort of showing off to investors. So there's a lot of corporate programs and government programs where they're essentially have procurement goals to purchase a certain percentage of supplies from women-owned businesses or minority-owned businesses. And so these certifications can be a real selling point. So last topic that I will go to, just look quickly, is greenwashing. So this is a big deal these days in the legal world. So regulators, investors, consumers, nonprofits, I think the market is increasingly sophisticated when it comes to how it responds to environmental social claims, and increasingly quite good at recognizing and holding firms accountable for situations in which the firm is essentially virtue signaling or trying to slap the ESG label or this impact label on itself without actually having the processes and the procedures and kind of the mission to back that up. So these are just some of the big newspaper headlines. I think actually getting dinged by a regulator or being the subject of intense NGO activism, for a lot of small businesses that seems sort of way out there, and it probably is. But I think as you're looking to attract consumers and build customer loyalty, this can be really important, and it can be really important to sort of making sure that you establish that strong reputation. So to the extent there's an environmental or a social story that's part of a business or part of an investing strategy, it's important to be really authentic in that. And this just is some examples of what greenwashing is. I mean, at a high level, it's basically a mismatch between what a company says about its performance and then what it actually does or doesn't do. And there's lots of ways to do that. So I think it's just important to make sure that when you're talking about your intentions or the kind of desire, the good attributes of your investing strategy or your company, you want to think about sort of what processes, what procedures, what data do you have in place to back that up and to make sure that it is accurate and couldn't be misinterpreted. And this, I have one note here about impact investors, and this goes back to that additionality point. It's important to not take credit for things that a company does sort of irrespective of your investment. If you're an impact investor, you really want to be tying sort of any touting of your own success to the dollars that you put in to the investment. Last item, I publish a weekly ESG roundup newsletter that goes out to Kirkland clients as well as internally at my law firm. If any of you would like to receive that and just kind of see what's in the news on these topics, you're more than welcome to by emailing the address shown there. And that is all I have. I've taken a half hour of just me speaking, so I'd be delighted if anybody has questions or if there's anything that I can answer for you.
Thank you so much, Jennie. I absolutely love all of this and keep learning more every time. Maggie, I'll post the email address for the Kirkland ESG Roundup in the chat in a second. Please give a big round of applause for Jennie, either virtually with the little clap emojis or in your screen if you have your video on. Oh, there we go. Thank you, Jennie, for posting that email. Much faster. And we'll send the recording and the slides to those that registered for this event as well, so that you can rewatch your favorite parts, read all the small tidbits of information that Jennie added to the slides, since there are so many great nuggets of wisdom. I know the legal terms in particular fascinated me, and the different, how do you incorporate that? It can be very basic and simple. It doesn't have to be overcomplicated like a lot of people might think when incorporating impact into a company's DNA or for an investor's investment thesis. So I certainly appreciate all of this. I'll open up the floor if you either want to raise your Zoom hand or unmute and chime in. Huckleberry, have you unmuted to ask a question?
Yeah, I was going to let other people go because I did help organize this, but if nobody else has questions, I have lots of questions. Jennie, what are the relative size differences between ESG funds and non-ESG funds? What is that like mixture?
Yeah, like, so in terms of the percentage of the market that's, I mean, the US SIF has a statistic that's floated around a lot that's like $1 in $3, you know, in the US is now like invested with a ESG mandate. I'm a little skeptical of that figure because I think, you know, in a lot of cases, we're talking about dollars that are flowing towards public equity funds. And I think there's, you know, been some valid criticism of like, you know, we've just kind of been slapping a label on these index funds and like adding a few more tech companies and dropping some fossil fuel companies. You know, so it's, I think, but it is like a big share of the market. I mean, impact would be smaller for sure. You know, it certainly is not by any means I mean, it would be mostly in the private market sphere and, you know, certainly not a majority, but becoming an increasingly kind of important percentage.
Okay. The reason I asked the question is I find the idea of impact investing to be problematic, given that it might be in opposition to other dollars that are being invested elsewhere. So for example, like suppose you have an impact investing fund that invests in companies that are making better food, better quality food and better vegetation. Then you compare that to the larger companies that are making lower quality food. It seems like one fund could be providing social progress while another fund could be taking it away. So what I get curious about with impact investing is it a reliable tool to actually be able to create social progress and to create good in the world when there are so many others?
Yeah, I mean, it's a good question. And it's sort of the, you know, if we take a step back, I mean, there's a big intellectual debate out there about sort of the ability of, you know, the private market to sort of get us to, you know, to help solve climate change or, you know, advance racial equity or solve, you know, some of these other big issues of the day. And I mean, I think what you've hit on is sort of the externality problem, right? So, I mean, certainly I think there's a lot of good that impact funds can do and can bring, whether that actually kind of is the answer to solving the global problem, I think is less clear because, there's always going to be somebody out there that's willing to, kind of race to the bottom or invest in the dirty companies to be the dirty companies, so long as what they're doing is legal. So yeah, it's good. It's a good question.
Thank you.
And I think there's like I personally think about this, right? Because I spend my days helping companies that want to do ESG and, private equity firms that want to do ESG, and some of them for better, some of them because they believe in it, some of them because they feel like they have to. But, I think it is important to think about that. And I think, even as like a business or an investor, think about like how you advocate in the public policy realm. Because I think sometimes there is a danger if the mantra that you're selling is sort of like, we got this, as the private market, and that may not always be the case.
Thank you.
I'm curious, we have a couple different business owners or aspiring business owners on the call. Curious to hear your perspectives or questions around how to take in some of this information and apply it to your own businesses. Is this information that you think might help position your companies towards either investment or growth of the business in and of itself?
I mean, I'll jump in here without a doubt. Sorry, I've been double booked. I'm in another meeting right now. So yeah, no, I've been listening in. I'm very excited about the presentation today, Jennie. I'm the founder and CEO of Get By, which is a labor marketplace for formerly incarcerated people here in Anchorage. So definitely right up the ESG alley.
Yeah.
I wanted to ask, my company is pre-revenue, and so in terms of like seeking ESG or social impact investment, what would you say is like the sweet spot in terms of like the evolution of a small business or a startup when seeking social impact investment?
Yeah, I think like at that stage, right at the pre-revenue stage, it's to basically kind of know your story. And I suspect that, right? You can articulate like why this is important, and maybe be able to like articulate sort of the number of jobs that could be filled, or the number of people that are coming out of prison and need jobs, right? And sort of being able to say like, this is what we're solving for. And then of course you have to have the profitability story too. But at that stage, it's really about knowing yourself. So it's not about like going out and looking at some framework and adopting some metric that seems crazy and foreign. It's really about like starting small. But I love that business idea. There was a similar company. I lived in North Carolina when I was in law school, and there was a similar company there that was a moving company. And they employed all formerly incarcerated people. And they were by far the best movers that I've ever had. And I've had a lot of movers.
Yeah, no, thank you for the feedback. That's great to hear. I've explored many different routes for funding, and it's the business is just about to launch, and so it's interesting to just kind of hear about. You were just talking about policy, and it's like fair chance employment and second chance employment in Alaska is not like I feel like it's just something that kind of is a thing, but it's not something that like as a business community, everybody's talking about. So like, whereas in other states, it's definitely just like out in the open, and there's a bunch of different nonprofits that are doing the work. And so it's it's an interesting sort of like political environment as well, in terms of like advocating for policy changes like at the state level. So I guess another follow-up question. So doesn't necessarily matter like the phase of the business, doesn't matter the revenue. So I would ask, if there were many different firms that were adjacent to the firm and it was selling a specific niche social impact, and there were many firms that were sort of adjacent that were doing something similar, and I'm not saying this about GetBot, I'm just like asking a hypothetical. So like in the nonprofit environment in Seattle, for instance, there might be 30 nonprofits that are working to connect formerly incarcerated people to job opportunities. And then there might be 4 businesses or startups that are doing the work. And then there's the job centers. And so like from the ESG lens, as you're applying this lens, do you look at like, you know, if the impact that's being made by a climate technology startup is in the same sort of like geographic area as a bunch of other climate impact businesses, does that affect the probability of you making the impact investment?
I actually think the question of, as you've articulated, it's almost more of a business question, right? So like, it's a question of like, how do you, I think it's a question of knowing how you fit in that broader ecosystem, and how like what you are doing is bringing something new to the table in that ecosystem. And that's how you're going to be successful as a business. And that's also going to be, you know, how you're successful, I think, in telling like an ESG or impact story. It's sort of the additionality point in a different way, right? Like how, you know, what is it that you add? And I don't think that there's like some, you know, if we talk like really big, you know, scale, like in terms of like how funding works when we're talking about the pension funds out there of the world, like they do have like allocation buckets for like where they put dollars. So they might have, you know, some amount of dollars tagged for this and some amount of dollars tagged for, you know, public equities, and some for, you know, and so like in some sense, it's like zero sum, but I think in a practical sense, like it's not, you know, if you have a great business, it doesn't matter that there's, you know, other people out there also getting dollars who are trying to solve the same problem.
Solid. Yeah. I just wanted to echo, you know, there's all sorts of fantastic nonprofit organizations and other businesses that are targeting and trying to solve the same problem. And I think they just all have different takes on it. And so my opinion is that I'm not sort of talking down on any of their solutions. I'm just saying that mine's another tool in the re-entry toolkit, right? Yeah. So, and I talk about it in that way, so that instead of it being like, oh, hey, ConConnect, they might be one of my direct competitors. Oh, instead of it being like, oh, ConConnect's not doing good work, which I like in my heart believe the work that they're doing is so empowering and it's such great work. And it's like the whole, you know, full circle support, but that's not what I can offer with my business. And so instead of like saying that that's what I'm doing, I'm just saying, hey, I'm going for this one small little niche area that I think I'm keyed in on targeting. And maybe if that's part of what they offer too, in my opinion, instead of it being like, I'm competing with them, I'm saying I'm competing to try to solve the problem, right? Yeah. Instead of it being like they're my direct competitor and they might be threatening my revenue, I'm looking at it as this business wouldn't have to exist if there weren't formerly incarcerated people looking for work, right? If no one was going to jail, GetBuy wouldn't have to exist because this app wouldn't have to be there, right? Like it would just be people using Lyft and DoorDash. I'm going to stop talking though. I really appreciate the time, Jennie. I'm gonna reach out on LinkedIn, and yeah, thank you all for the time today.
Thank you. Okay. Anybody else? Well, I'm easy to find if questions do arise. I'm on LinkedIn, I'm on the firm's website, so feel free to ping me.
I think there are definitely some interesting philosophical debates to be had whether everything in Alaska is considered impact or not just by virtue of Alaska, either the environmental resources that we have here, or the fact that we have such a low population count, that we have such a high Alaska Native population here. Like, what Alaska is such an odd place, and what is the benchmark that we're comparing to? And there are a lot of cool things going on here that could qualify as impact anywhere else, but because it's Alaska, it's just normal for us to have whatever it might be. And impact is a very broad word, and people can take it or leave it and incorporate it or not. And it's all about defining it at the end of the day. Questions from other folks, or comments for that matter? Lovely. Well, if there are any additional questions and comments, we'll share Jennie's information. And we hope that this was all informative. As I said, we'll share the recording and the slides as well. If you want to relook at any of the juicy parts of this conversation or the slides, and be reminded of what we discussed, and hopefully you found this all informative and helpful to whatever area you are working on. And perhaps for those of you that are in Anchorage, we'll have a funders and founders lunch next week, next Wednesday, to connect informally, socially, potential investors with startup founders at the Eureka space, dubbing it the $10 lunch, to reduce the barriers to, well, not entry in the sense that Demetrius was talking about, but to be able to reduce any barriers for startups to meet investors in the community. We're having this in-person gathering where we'll provide lunch. The maximum you pay is $10. Everything else is covered by the Alaska Investor Network. Thank you, Huckleberry, for adding that to the chat. Hope to see those of you in Anchorage there next week, this time next week. And I hope you all have a great rest of the day. Thank you again, Jennie, for spending time with all of us and sharing all these juicy insights.
Absolutely. Thanks for having me.
Have a great day, everyone.